Hello, everyone. Today is Tuesday, June 2nd, and I'm Michael Boutros. Good to be with you here, guys, for this intraday strategy webinar on SB Trade Desk. Good to see everyone in the room. All right, so let's get started. There's the opening ranges are in focus. GS, thank you for that. Eileen, Tuttle, Mark, thanks for that. Kyle, good to see you as well. There's been interesting opening ranges for the setup of the week. The focus here, I was looking at your chart, is obviously that you're seeing that the greenback is weaker against all its major counterparts today. The Aussie, the biggest winner, 1.12% overnight after the RBA decided to hold interest rates unchanged at 2%. So obviously, the expectation heading into that read, guys, was definitely lowered as far as the expectation for them to cut rates, but they left the door open. Okay, and some interesting comments that came out of the RBA specifically says that monetary policy needs to stay accommodative. The other thing that kind of highlighted across all the news wires was the RBA saying that further Aussie depreciation seems likely and necessary. And typically, guys, as backwards as it seems, it's almost a guaranteed when a central bank says that the currency rallies. It's just the way it happens. I could show you a million instances of where that kind of jawboning or central bank rhetoric has actually fueled strength in the currency. Now, it's not necessarily going to last. We're not necessarily looking for a major reversal per se yet, but it was a good play to the upside in the Aussie dollar. So before we jump into the Aussie, I do want to cover the scalps that's on the intraday page. Obviously, we've been tracking dollar CAD. It's been disappointing as of late. The range is so tight, it just won't give out. But we are finally making a move sub 125 here, and that's going to be the focus at least until as we head into the New York session here. All right, first things first. So the dollar index, just to show you where we are. Yesterday's break did take us above the 100% extension, which was at 1190, and that was the level that we noted as near-term support that we would need to get a break below to sort of shift the bias back to the downside. Do want to point out a couple of things here. We're just opening up the month, and it's too early to tell again if you've made a turn or anything, guys. But momentum, perfect tag of 60 in a reversal from a sub 40 read. Okay, so from the momentum standpoint, if you take a look at the profile, last time we saw that was right here. Obviously, this was still coming from overbought, so it wasn't even as strong a signal as this is. So we want to be very mindful of that. If we see a 60 break, again, near-term resistance that we would have looking for on this stretch was 12,071, and that is the reversal close that we made back on April 14th. Here's what the index looks like on the near term. So for the 30-minute chart, you might have seen me tweet this last night. We're still looking at that 11,990 level, which is what we just highlighted. Also near term, this constitutes a break of the formation here that we've been in for a couple of weeks now. You can see the median line catching the highs, highs, highs. Not so much nice on the median line itself, but that confluence break there that we highlighted last night, as long as we hold below 11,990 near term, you do risk a little bit more of a slide here for the greenback. So to open up the U.S. session, I would be looking for this thing probably to test 12,000 again. But broadly speaking, as long as you stay below that median line, you want to be cautious about getting aggressive on the dollar. Looking at the economic docket, 9:45, we do get the ISM New York print. That's not going to be as big as read as the 10 o'clock factory orders. And certainly that we are looking for a print of -1% from a previous read of 2.1%. So the possibility for a weaker read here, again, keeping us cautious on long dollar exposure. One thing I also do want to note, obviously it's a big week for event risk, right? We still got the ECB, BOE, ADP, the employment report from the United States, and non-farm payrolls on Friday. So to open up the month, nice jam-packed schedule. We'll be watching the dollar index here. See if we hold below 11,990. We need to clear below this on a closed basis, guys, to really get any type of pullback. And if we get back below this, you're looking for essentially a move back into key support at 11,898. So with that index sort of in view, that the dollar has responded to initial resistance here. Hey, Premendra, good to see you. Good morning to you as well. You're just turning ahead of resistance. I wouldn't put it past this thing to make a tag of 12,071 at this point still. But with the momentum turning, it has us cautious here and looking for signs of some sort of pullback for the greenback. Any questions on the dollar index before we move forward? All right, let's jump into the scalp. The dollar CAD. Eileen says the march of the acronyms all go on vacation before all go on vacation, right? So June trade, right? It's not necessarily going to be the most volatile month, guys, but definitely there's opportunities across the board. So here's what we're looking at with the dollar CAD. Let's start with the daily. So we came right into 25.59 to the pip, guys, and 25.59 is the 2015 high day close. So certainly a level we mapped out weeks ago. We've been continuing to watch it for the close that we made here on the 18th of March. The high that we made yesterday was exactly 25.62, so we overshot it by 2 pips. Long story short, the long side of the trade remains vulnerable here. Here's what it looks like on the intraday. Okay, so these are the levels that we mapped out yesterday in the scalp. Here's what it looks like on the intraday page. And as we came back and tagged that into the U.S. trade session, by the way, guys, a quick note, for the U.S. opening ranges, it pays to wait out till 10 o'clock over the last couple of weeks. I was just going back and checking out some of the opening range trades that I took, and a lot of the breaks have actually been happening post, the 8:30, 9:30 initial opening range that we tend to look at. They've been forming into 10, and then some of them have been breaking into 10:30. So remember, when we're talking about the opening ranges, we don't want to necessarily stress time, more so always putting the emphasis on price. So just a quick note there. But you did finally see a trigger break of that trigger that we were looking at since the start of the week here in momentum. That break sought a break of the Asia opening range low. Okay, wasn't much room to play here, guys. We're talking about like a 20 pip drop. I know that the ATR is tight, but I wouldn't even be interested in taking something like this. Even if you're getting a trigger break, if there's near-term support, and certainly this was a near-term bearish or bullish rather invalidation level, it pays to be a little bit more cautious here. So I'm going to want to see a more definitive push below 125. Remember, again, that's going to be the 100% extension from the advance off the lows. And such a scenario, look for a target right into a basic slope line for the operative pitchfork that we're in. So that takes you basically into 124.50. Okay. Key support is going to be the 124 handle. That'll complete a basic 236. And again, the median line intersects that somewhere tomorrow into Thursday. Or I'm sorry, Asia tonight into Thursday. All right. So still looking for evidence that this thing is going to turn over. Momentum on an intraday basis hasn't made it quite below 40 yet, so we don't have that sort of conviction for the reversal. Long story short, and we went over this yesterday in the scalp webinar, guys, on daily effects. Remember, Monday webinars are on daily effects for the public. But a quick look at the daily chart, this is basically the operative slope line that you'd be looking for, and that comes in at 24.50 as well. So the intraday and the daily here looks pretty clear on the targets. What I wanted to say is this: if we do continue higher and we get the break, remember, this is the bullish invalidation level. As it stands right now, you're still in a bullish formation. So if we do break the highs, you're looking for that tag at 126, essentially 126.17, and that coincides with the operative median line slope there. So that's this region right here. So again, the levels are pretty good. I'm going to be working with this being the opening range low, 24.50. Obviously, 25.60 is the opening range high. And, we'll look for a break of that, more definitive break for dollar CAD in the days to come. A trade that, again, the scalps might not be primed. It's really early in the week, really early in the month, guys. So if you're getting a little frustrated waiting for these, I'm right there with you. Patience pays in these types of strategies, and we kind of just need to wait it out. But I do want to also highlight one thing, is that Friday is going to be especially important for dollar CAD, which is why it's been so interesting for me, because it's going to be a double whammy. Okay, you're going to get the Canadian employment read and the U.S. employment read. And when those diverge, sometimes they can be awesome, awesome trades. So either a weaker print in the United States, stronger print in Canada, or vice versa. you could get a nice play off that. So Friday's still going to be the main event here for these dollar crosses, specifically with the cross in data dollar CAD. All right, so heading into the U.S. session, we'll be looking for a little bit more evidence. We're looking to sell rallies below 25.60. Again, 25.60 will reserves the invalidation. Topside break, you're looking for a run into 26.18. Near-term support with a break here, 24.50. Aussie dollar. Let's jump into the good old Aussie. So RBA comes out and says, this is not necessarily tightening. They're looking for need to keep monetary policy accommodative. Yada, 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 more jawboning. Aussie needs to go lower, right? Well, Aussie doesn't need to do anything. Aussie's going to do whatever it wants, and we saw a nice rally on the back of that. The interesting thing here is that momentum did make it back above 40. Again, this is only based on the close, so we'll have to see how today closes. But testing near-term resistance right now at 76.80. Also, you're looking at the lower median line parallel there being tested as resistance. All right. On the intraday, we were looking at that channel, guys. I'm sure you've seen this before as well if you've been in the webinars. For over, almost a 4-week stretch. 3 weeks is about the exact timing. And you would expect that breakout would give us a little bit more juice to the upside. Remember, the invalidation level near-term resistance was 76.80. And that's what we're trading above at this point. Let me zoom this out. I think there's something that needs to snap here. Sorry, guys. There we go. Okay, so there's that median line parallel, same one that we're looking at a daily chart, being tested as resistance, kind of meandering around that right now. That's going to be the focus heading to the U.S. session. If we break higher, you're looking for a run to 77.67. Okay, let's say the opening range for the United States breaks to the upside. You look to buy pullbacks into 77.67, which is going to be a nice pivot from last week. More importantly, the 78 handle comes into focus right here. And on the daily chart, there's a 78 handle, the opening range low basically for May. Ahead of that, I do want to just note this one target, guys, which is basically in the same line with where that 77.67 target is. If you look on the daily chart, watch that median line off the highs. Okay, if that's still an operative formation, that'll come in right around that same level at 77.55, 77.60. The lows on the downside of the trade is that the low day close, again, for 2015 comes in at 75.90. That is sort of what I was hoping to see a dip into on RBA. It would have been a really nice trade, in my opinion, just to have a position here. RBA comes out, whether they were going to cut or whether they're going to talk, talk the currency, whatever they want to do, you'd expect to see a little spike into that you were able to buy. We didn't get it. This thing just started moving right off, guys, to the upside. So, again, when expectations are all leaning in one direction, comments like the Aussies overappreciated typically will lead to a nice little rally here. So we'll watch that 76.80 level heading into the U.S. session. At this point, I'm actually willing to move that into 78.6. I'm sure that'll actually line up with price action better. There we go. Remember the Aussie pairs, we should have had that in 78.6. So this is going to be your near-term support. On this one, I would like to stay constructive above the channel resistance. So I wouldn't put it out of the realm of possibility. Come back, check channel resistance as support, then move off. Such a scenario might actually give you a nice median line formation to work with. But near-term, constructive above 76.67. And at this point, as I said yesterday, once we get some sort of reversal break, guys, remember, objectively, this is also a break of the initial opening range high. It's a little too weak and it's a little too early in the week to sort of call this, but as long as we hold above 76.65, we'll continue to favor the top side. One thing I do want to just take a quick gander at is what the retracement looks like right off the highs as we try to map out some targets here. Okay, it brings 77.30 into view. Sorry, guys. There it goes. Okay. 77.31. Okay, initial resistance, 77.67 is still the one I'd stress. And then the 38.2 comes just above that 78 handle. So we'll keep the levels clean here just for the sake of clarity. And we'll work with these levels here. So feel free, guys. Again, if you're newer to the room, remember you can always take a quick snapshot of anything that you see in the GoToWebinars that we do on SB by clicking on the camera in the top right-hand corner of your GoToWebinar screen. You can always have these charts for your reference. Also, they are on the radar charts for the intraday page. So again, here's what we looked like on Aussie last night. We were making that turn. We actually tried to make a break of the initial opening range high for Asia, but it was kind of a really messy break into the stretch, so not much there. Obviously, the RBA coming out gave us the pop right through that near-term resistance. Mark, your question was, morning, Michael, when going over the Aussie dollar, I'm hoping to get in at 76.50 for 78.14. 76.50. I don't really like taking these trend lines, but of this slope here, just off the real near term. But yeah, I think you can get a dip into that region. That actually map out really well, Mark, if we come back and test this trend line or this channel resistance as support. So it actually makes some sense to try to take that position. Also, you're getting a near term trigger, which is coming into play right now. Okay, with that break in momentum. Not an operative play. I don't typically jump into a position, 45 minutes ahead of the U.S. Open, but look for that support down lower at 76.67. Yeah, the 50 range would be all right with me on that one, Mark. That would look for a nice entry down there, but you want to see momentum also hold 40. In such a play, you'll probably have a nice pitchfork to work with afterwards. So yeah, I'm in the mentality of buying dips on that one, Mark. I just would be cautious about one thing. If we make it back below that, channel resistance, or specifically if we break this near-term trend line support, be careful. The thing could just tumble right back into the lows. Stop would be right under the channel, says Mark. Yes, great, thanks. I appreciate that, Mark. You're more than welcome, my man. Not bad. But it's interesting because it's definitely not, this is where experience comes into play, guys. It's definitely not the play that the market was expecting as far as Aussie rallying on something like that. So it pays to have been through a couple of these before. All right, so let's jump right into the too dangerous to get long or short now. Mark, right here. Yeah, I don't typically place trades at this time of day. I want to see what the open is. If you do take a stop, or if you do take a trade, the stop needs to be against that 76 or the 77 high for Europe. All I want to say is this, Mark. I'd rather be on the long side. I'd rather be looking to buy pullbacks than actually playing the pullback into the support, because you might not get the full stretch, right? And if you don't get the full stretch and the thing continues higher, and now you're just sitting there trying to play the pullback. I have nothing wrong, guys, with playing the pullback. I got no problems with that. I do that frequently. A lot of times coming out way ahead of the quarter ATR, but just got to remember where we are and where the dollar is. So yeah, 38.2 is also highlighting that 76.50 region. 50% of the move would be right at that level that you're looking at. All right. Questions on the Aussie before we move on? Tuttle, hey, I missed your question there on the dollar CAD. Let me bring it back real quick. No problems. Tuttle saying there was a London opening range set up for dollar CAD this morning. 20 pip stop, 27 pip ATR, RSI break at the 2 hours into the session. Would you have taken the quarter of the 20 pips and moved stops to break even, or would you have looked for the 27 pip and gotten stopped out? Good question. Let's take a look at that. Guys, let me bring up a near-term chart. Give me 2 seconds here. Right. So the London opening range, you're absolutely right, gave way right here, right? And you're asking on this stretch, do you take the trade or do you wait out for the 27 pips for the ATR to the upside, right? I was looking at the 5 minute. Yeah, I'm bringing that up right now for you, Tuttle. Here it is. Great. All right. Okay, so here's what Tuttle was looking at, guys, and this is actually a good quick crash course on opening ranges. So here's the London Open, right? London sets a low, we push through into a fresh high, test the low, fails, we break the highs. There's the opening range. Okay, a little messy on the break, but you're looking for 27 pip ATR stretch to the upside. So right here, you're basically looking for 37. It halted at 30. And Tuttle's asking, do you take that trade or not? On the initial pullback here, to be honest with you, Tuttle, no, I probably still wouldn't have gotten concerned. What I would have gotten concerned is on this stretch. Okay, momentum holding 60 on a closed basis and actually provided some divergence in price. Ooh, I don't know who looks at high lows, but there we go. A slightly higher high, definitely a lower high, right? And then it was followed by a trigger break. So the tip to get out of this position, remember, we don't only use triggers for when we want to be in the position, but we also want to use it for when it's prompting us to get out of the position. And here's divergence into a support trigger break. That's all I would have needed to see. Okay, and that would have been reading your question again. Yeah, so at this point, when I'm seeing that divergence signal, that's when I'd probably take a quarter or half off the trade, bring the stops to break even. Once you see a break like that, I'd probably just kind of skip ship for it. All right, so yeah, Tuttle says, got it. I missed the trigger to get out. Thanks. Yeah, you're more than welcome. Again, it happens, guys, but once you take the trigger and you're in the trade, now you're just focused on price action, which is, I'm all about it. But be mindful of these things, right? Because the divergence into a trigger break is always going to be our most preferable signal to try to jump into a position. And specifically, if you break back below the opening range high that initially prompted the trade, that invalidates the move too. Okay, if there's ever doubt, guys, and you're seeing something like this, I'll take 10, 15 break-even trades a week, guys. I don't care, right? It's not going to be the end of the world. Obviously, no one's making money taking break-even trades, but I'd rather take that trade on a break-even when I'm looking for the turnover than necessarily, wait it out and just eat the stop for no reason. There's obviously a clear trigger that shifted the bias to the downside in that 5 minute, and you just want to be mindful of that. Tuttle, does that help? Does that make sense? He says, what about the descending RSI break right at the initial break? You wouldn't have entered then? No, your entry wasn't bad. Your entry wasn't bad. But guys, it's not always going to work out. It's not always going to work out. You might have been looking at this one. It's even a better one. Because again, you had some divergence. Price lower low, oscillator higher low, trigger break, stop against the lows. Heading into Europe, it's tough to take it right into the opening range, but we got another trigger here as the opening range broke. So no, I don't necessarily have a problem with the entry, Tuttle, but sometimes you're not going to get the full stretch into the quarter ATR. And instead of just being stubborn and kind of just taking a quarter of the trade and waiting out and risking taking a stop, I'd be more than happy to kind of just grab it, take a quarter off the table, half off the table, and let's just sit here and play with the house's money. If it comes back and stops me out, no problem. we'll look for another entry. Just remember that we do have a broader outlook looking for a turnover, right? So we just came off that key resistance, and specifically the high day close for the day is always going to be a nice level where if it's going to turn, you'd expect it. But remember, I mean, you're testing a sort of the invalidation level now, right? Guys, again, just to be clear, the broader upside focus for dollar CAD is still in focus. No one's changing or disputing that. It's just on a tag of a major resistance like that with the dollar doing what it's doing. You could see a little pullback here, but objectively, we would be looking to get that pullback to use it to get back on the long side. All right. So Tuttle, I hope that helps, man. That's a really good question. Feel free to throw those out in the room. I'm sure a lot of people are benefiting from that. Mark says, I have become a real lover of your scalp strategy in a 5-minute, but mostly in conjunction with Jamie's swing trade charts. And that's the best way to use the service, guys. There's so much more offered than just the intraday charts and, you know, the swing trade entries, exits, and stops, right? I would just caution you on trying to adjust or combine them too literally, Mark. Do you know what I mean? Because the only concern I have is when you're in a swing trade and you're seeing a 38.2 or a 50%, maybe not 50, but a 38.2 or near-term retracement. A lot of times from a scalping strategy, we're looking to take some off the table. But if you start doing that in the swing trades, it's really going to alter your broader performance, right? But definitely the type of analysis that we're looking at, how we're approaching the markets, does tend to work really well. That's where the synergy with us started from the beginning. So, Mark, I'm glad that you're finding that helpful. Tuttle says, great, very helpful, Michael. I appreciate that, Tuttle. Eileen says, thanks, Tuttle. I've 2 lost trades from win to loss because of waiting wrongly for the full amount. Right. Guys, the quarterly ATR target is just guidance, right? Just like RSI, it's just guidance. Price action is the most important thing. So, you know, the markets aren't static. Sometimes you'll get way more than 27 pips if that's what the quarterly ATR is showing. Sometimes you'll get a 20 pips pop, right? So we always want to be making sure that we're attentive to what price is doing in the near term. Great discussions, guys. Awesome. And there pops Euro, says Eileen. Let's take a look at the Euro. So here's what the daily looks like. And whoa, we are coming into that major resistance. This is fast. All right, 110.95 into. Sorry, guys, I'm not sure why there's lag here. Okay, 110.95 into the 111 handle, basically, is the region of resistance that we wanted to highlight here. I know this chart looks a little messy, guys. Let me just get rid of this 50-day moving average here. I know it looks a little messy, but bear with me and I'll break it down real quick. So you're looking at a couple of different things. This is a longer dated 100% extension off the highs. It's been a really nice pivot. I typically wouldn't continue to use these longer dated extensions on both sides, but you can see how clearly price has been pivoting there. That's coming into view at 110.95. The lower median line parallel for the operative trade that we were in for 3 months at resistance. The 100-day moving average comes in at 110.82. And again, we talked about this last week. You know, that lower median line parallel for a broader structure dating all the way back to the highs that we made back in 2012. Nice pivot in price. That also on that region. A look at the near-term price action from just the decline off last month's high puts 1140 as the 50% retracement. So this entire region, basically from 111 to 111.40, major level for the euro dollar. And here's what it looks like on the near term. Even on just the price action we've seen from last week's low, upper median line parallel comes right also into that region, 111, 110.95 being approached at this point. Daniel Wilcox says euro in general was a rocket ship off the lows at yesterday's London close. Hopes Italy loaded up at 109 as well on euro dollar, right? Yeah, Dan. So obviously CPI data coming out stronger than expected, guys. And you know, let's say this. The CPI came out at 0.3%. The estimate year-on-year expectation was 2%. Let me show it to you real quick. More importantly, the core CPI, okay, came in at 0.9 versus 0.7%. Remember, the ECB's goal, and again, their charge is price stability. That is their single mandate. And if inflation starts to pick up, that reduces the likelihood that we'll see them increase their monetary easing or their laxness in policy, right? QE, essentially, what Europe's doing. So if we're going to see a pullback in QE, well, that basically means that you're not going to, the equity markets won't be so happy, and the euro should actually rally because easing is going to be a euro negative story. So on a beat like that, when you're looking at Europe and you get CPI coming out stronger than expected, specifically with inflation numbers, that's obviously going to give a little relief rally here. Remember, we're heading into the ECB on tomorrow, okay, at 7:45, and more so than we're not expecting them to move on rates. We're going to definitely looking at that presser with Mario Draghi. We'll be looking to see or gauge where the committee stands as far as QE measures, upping the game or upping the flows as they said they would heading into the summer months. So look at 111, 111.40 on a major stretch here, but as long as we continue to hold above this median line now, will remain favorable for the long side of the euro. Okay, so that's going to be your near-term bullish invalidation level. Again, objectively, forget what Michael's saying, objectively, this is going to be a break of the initial weekly opening range high. And you'd look to stay constructive, broadly speaking, above 109.90. All right, so Mike, what's the game plan from here? Okay, we missed the stretch. We didn't take this long right now. Here's trendline support. You wait for this to pull back and give you a long trigger while above this, or if this breaks, you look for a long trigger as momentum holds 40. Price action from a standpoint there, you look for entries coming into this region, stop against the opening range high for the week. Okay, on a breakout play, 111.40, again, I wouldn't really look to play the breakout until you get through that. We just highlighted that on the daily chart, right? The 50% retracement. A break through that puts into effect basically a 60 pip rally into the 618. I would look at that Friday high just ahead of that. You're basically looking at 112, 112.16. Real nice pivot in price. All right. Any questions for the euro? Dan says, oh man, I thought you'd be in already. Yeah, Dan, these breaks are all happening in European trade. I got to sleep at some point, as little sleep as I do get. And on a stretch like this, there hasn't really been much of a pullback to try to get back on the trade. Euro CAD is another one I really like. And I actually think I tweeted this last night. Here's what the daily chart looks like. And that break, the major break there was 37.50, 37.56. That's going to be the exact high day close from May, and a 50% from the pullback off the yearly high. So this retracement right here actually covers and encompasses the entire 2015 range. 50% takes you into 1329, or excuse me, the 50% was 37.56. That was the break. Near-term resistance, 39.29, confluence with a 618 extension. Really nice range. So we highlighted this earlier in the week. Obviously, it looks like the market's ahead of our timing, so we'll bring that right into that same range there. But that's sort of what we're looking for on the upside here for Euro CAD. All right, here's what it looks like on the intraday. Oh, off a clip here for the dollar. Remember, we have ISM data at 9:45 and factory orders, but nice break there. Oof. Didn't get the test of resistance, but there it goes, 11,960 near-term support. And again, you'd be looking for a drop into this median line or this slope line off the lows. More importantly, 11,907 to 11,890. I know, guys, we talked about that for months and months and months, and that is this key region here on the index. The former highs from last month, okay, and also a nice confluence of fibs once this loads. Right here at the 50%, and then again, it's actually the opening range high for the February open stretch, and that's also where the 100-day moving average resides. Okay, so on a move like this, I'd actually expect to see dollar CAD starting to move off too. That's approaching the bearish invalidation or the bullish invalidation level now, 124.50. So, we were looking for that entry mark. Let's see how this responds to this region. See how that responds. Okay. So the EuroCAD scalp didn't show that to you. That's what I was trying to do. EuroCAD. Here's, nope, still 5 minute. Here we go. So the invalidation level for the short side of the trade or the reversal type of play to open up the week, and we talked about this, was 37.50, right? You also had the upper median line parallel there, nice confluence for a near-term move higher. So at this point, the stretch, there's not much ahead of 139.11, 139.30. So let me bring the daily chart back real quick and put them side by side. You kind of get a picture of what we're looking at. There we go. So 138.88 is going to be that 6.8 off the low. Again, sometimes there's some discrepancy here in just price action as far as the intraday charts and the daily charts, but in any event, right into that 139 handle is essentially what you're looking for as resistance on this stretch. You stay constructive above 37.50, looking to buy pullbacks well above that region. The only other thing I want to also point out, guys, which would be really cool if we do actually get it, is right here. Former slope support, the trigger that gave us this little down move, held 50. That's as strong a signal as an uptrend that you want to see coming off overbought. And here's your 60 break. Last time we saw a 60 break was right here on the 12th, and that posted a rally from the 143 handle right into the 146.40 handle. So almost a 350 pip run. All right. So just to put things in perspective, if this does close here, look for that resistance stretch at 139.30, 139 handle. Even above that, 200-day moving average comes in. At 139.60. They have some nice targets to the upside here if we do see the stretch. Questions on EuroCAD, on the scalp or the intraday? So again, your bullish invalidation level from 36.40 gets raised to 37.50. All right. So that is EuroCAD. We covered Aussie, Kiwi. Oh goodness, how could I forget? We're still working on the assumption, guys, that this is a major trendline confluence from a technical standpoint. Here's what the daily looks like. Jamie's been pointing this out. I've been looking at it. This is the medium or lower bound median line parallel, dating all the way back to the 2000 lows. Showed this yesterday, but I just want to point it out again if you missed that webinar. All the way back to 2000 is the operative median line that we're working off of. And if you extrapolate that slope, or if you extend that slope, sorry about that, if you extend that slope to the lows that we made here in 2009, post-crisis, comes in right at the lows that we made this month, or at the lows we made basically yesterday. Now, the initial move back above 71 is what was confirming the near-term upside bias. I kind of noted that yesterday in the radar charts. And you're looking for a stretch right back into the 2011 low day close, which was the exact stretch low for February and March. And now it's the median line parallel. That comes in right around 71.75. Momentum trigger to the upside hasn't given out yet. This trigger would actually be really nice with a break above 71.75, looking for the monthly pivot in such a scenario. Okay, here's what it looks like on the intraday for Kiwi dollar. All right, so again, 71.47 is near-term resistance. It's also the opening range high for the week. We tagged that yesterday. Here's what we look like on the radar charts. Nope, that's Aussie. There we go. So our bearish invalidation level held. Okay, we went for a pullback. That didn't do anything. There wasn't much of a trigger that you're seeing here near term. I'd rather be looking for a break above 71.47, looking to buy the pullbacks. And again, if we do close above 71.70, guys, would suggest and would necessitate actually a break of this basic trendline resistance off the highs. So we are in a nice median line formation right now, but basic trendline resistance, nothing, by the way, supersedes basic trendline support and resistance, right? Not fibs, not moving averages, not, Ichimoku clouds or whatever you're using. Nothing supersedes basic trendline and resistance. So we'll be looking for guidance with a break above that, really validating a more significant reversal. Remember, from a momentum standpoint, we've been waiting for the turn. We've been getting some ongoing divergence, even into the last final low that we made here to start off the week. You're still getting divergent signal in momentum. Okay, on the pullbacks, turning ahead of 40. Okay, turning ahead of 40, and here we are, right back above 60. So look for that punch through 71.47 to tag that 71.70, 71.90 level. Friday's high is 71.90, and then need a break of this trendline resistance to really validate a more significant reversal in Kiwi. Mark wants to take a look at Kiwi CAD. Here's what Kiwi CAD looks like. I actually haven't checked that out in some time, Mark. So bear with me 1 second. Here's your opening range for the month. Okay, so you can see that pitchfork off of the highs. And this is off the 2011 low. Okay. Okay, so there's a key area of support right around here as you get deeper into June trade. And that's basically that 2011 trend line and the median line off of the highs. I'll probably adjust this just a bit and see what this high looks like. Yeah, nice little touches here. So if you get the July high, it actually gives you a nice touch in December, the lows for February, the close low for May, and actually we just rebounded off it on the gap here for the Sunday open. So let's just adjust this a tad. We'll bring this in. That's key near-term support. As far as resistance is concerned, the February low comes into focus just above where we are right now. You're looking at basically right around 89.36, 89.40. Near-term resistance. The major resistance on this one is going to be right into the 89.80 level. And that's actually the confluence of that median line and a basic 38.236 of the drop. Again, another retracement. I love using these guys a lot more aggressively. is when the retracement actually encompasses the entire monthly range. It tends to give you a little bit more of a solid inflection, whether it's a break of resistance or whether it's a hold of resistance on the way up. I have a trend line from 2009 low, says Mark. Yeah, that's this trend line right here, right? Depending on how you draw it. Yeah, I still from 2009. I'm sorry, this is 2011. Let me go back and check that. A 2009 low. Yeah, I see that. A little messy on the break that you got in early 2013 here, which is why I would tend to use the one off the 2011 low more. But yeah, Mark, I mean, that has us breaking right now. So that kind of play, you'd kind of want to see it reverse back above that. And that's what we're getting. I see what you're looking at. Yeah, I mean, it adds conviction. I'd be more inclined to use these median lines necessarily than that trend line, just because we've had a break below it already. And then even on these breaks here, once you start losing efficacy, the whole thing with trend lines, guys, is you're trying to look for, he says, well, with the most touches. I hear that. I'm 100% Mark. So you are looking for the trend line that has the most touches, right? But when you're looking and the price action actually doesn't respond to it anymore, it doesn't matter if you had 60 touches in the back, right? We're sailing through it at this point. So we've already made one break last month. Here's another break again. And this is on the back of the breaks that we made in 2013. So I'm not saying don't stress it. Sometimes these can offer some great guidance. But objectively, the shift to the upside happened on the near-term chart. Let's see what the Kiwi CAD looks like here. I'm not sure if I have it set up. Again, this is super stale, guys. I haven't updated this chart in weeks, so bear with me. We'll kind of get a gauge of where we are. So, might be a beautiful trade if you just take the, again, objectively speaking, Kiwi making a nice reversal. CAD, if it does start to come off, it's CAD strength. So, I'm not necessarily sure you'll see the upside explode until you see the CAD, the CAD find some support, and that's dollar CAD. Yeah, Mark, I'll take a look at this and we'll kind of reassess it tomorrow. I'm way behind as far as updating this with current price action, but a quick overview just so we can get sort of a plan in play. Okay. 50, much. It's a nice formation we were in for a while. All right. So again, basic retracement of the yearly range. Sorry guys, a little delay here on the computer again, so it's taking me a little longer to get these. Oh, repo close. There we go. All right. Okay. So there's the retracement. I want to see if this pitchfork actually looks any good. could be something to work with. Let's see if I can take that last high. Yeah, it could be something to work with here. You can see the median line catching those lows very nicely right here. So we'll want to see if this actually starts to carry out. That actually highlights a range of resistance right up at the 38.2 exact level we were just looking at. Wow, that's cool. All right, so we'll look for something like that as we open up the session. But listen, for the Kiwi CAD, I would just be very mindful of the fact that you have that data for Canada on Friday and where the Kiwi's trading. So I'd be looking to buy pullbacks while above 88.60 is what I have mapped out. What is that level? 88.60. Okay, it might be an old target, so I'm going to go ahead and remove that on the Kiwi CAD. $36. It's just closed 88.70. Yep, so we'll use that. This was yesterday's close at 88.70. That's going to be the near term, what we'll look for as support. Obviously, anything you take on this, it'll be more of a swing setup, if anything, guys. Wouldn't necessarily be a scalp per se. If you do take anything on this, your stop would be against the lows. Initial targets, obviously, just a basic 236 takes you into like the 99 or the 90 handle, excuse me, 89.80. And then obviously that confluence region we just highlighted is going to be the major resistance that you need to look for. And that would necessitate a break of the weekly opening range, which we haven't done yet, if I'm not mistaken. Right. So we're attempting that break right now of the weekly opening range. Sunday open, punch into a high, fails, test the low, punch into another high, holds. Got a really nice range to work with. And here is also, looks like a trigger break is about to give out to the upside. Remember, you're only looking for this 30 for confirmation once you're in the trade, guys. You jump back to the 5-minute chart to give you the trigger, then we come back to the 30 and watch this pan out. Because this signal line has no bearing until that candle closes. And that's something I have to stress here every single day. You don't want to take the initial break here. That's where the 5-minute chart comes into play. Mark says, it's okay, I don't want to take your time away from the others. Nah, it's an interesting setup, Mark. Once you spark my interest, it's hard to stop me. Chintan saying, I have 2 terminal, and both are showing different pricing for the Aussie Kiwi. It depends what you're looking at. I mean, are you looking at both FX streams? Also, make sure if one of them is a demo and one of them is real, you'll see a change there. If one of them is on the futures, if you're looking at the futures, will also be a little bit different from what we're looking. It says both are live with the same broker. Yeah, you probably want to give them a call if that's the deal, Chintan. If they're both live accounts, not sure. Just wanted to look at the spread, make sure what's going on there. But Aussie Kiwi, an interesting pair. I've seen asked a couple questions here today. Here's what Aussie Kiwis look like on the daily as well. I have us at the same resistance level we were looking at in that stretch last month. Now, we did punch through it, but we only spent about a day there. And that's the basic 618 retracement from the decline off the November highs, which was multi-month high and a yearly high, essentially, for 2014. Let's see if we can get anything going here. Obviously, it's a constructive trade, right? On a trade like this, here's the monthly opening range for June. Let's see what the near-term chart looks like. Okay, so objectively here, you came back, made a 38.2, the stretch off the lows, broke the weekly opening range, it looks like, and they're testing it as support right now. Momentum remains constructive. You can even see this pivot lines, guys. And again, it pays to leave these sometimes. Support of the consolidation that we were looking at 2 weeks ago did give us the downside break. Looking for that run into 105.60, didn't really get it. Seized up right before, about 15 pips off, with that massive run up that we saw late last week. That same trend line, again, for the consolidation pattern, been a real nice pivot in price. Also now is offering some support on the way down. So I'd actually be looking higher in Aussie Key. The only thing, again, I'm not really too crazy about is the fact that I actually am looking for Kiwi strength as well. So again, when you're looking for those divergence or when you're looking for a pair that's not diverging as far as both of them appreciating across the board or both of them depreciating, you get a lot of this. So that's my only concern on a nice stretch like this. This is obviously RBA inspired. So we always want to remember when we see these up stretches, these are in reaction to, things that are happening in the now, the release of the RBA minutes or the release of the RBA statement alongside a hold in rates. So I'll want to see a validation that move has caused a change in behavior. And certainly since the start of the week, 60, got a little dribble below 40, but you were putting in divergence. No divergence here. But you were holding 40 as support. This is your first 60 break. You'd expect to hold topside breach above this region. You're essentially looking for 108.50. That actually coincides really nice with that major trend line as well. Just a basic trend line support, turned resistance. A little higher, 108.65 on that. So I hope that helps on Aussie Key. It doesn't have the largest ATR at 101, so quarter is somewhere obviously just around 24 pips, a little bit tighter than I like to see. But yeah, I mean, on the back of what happened yesterday, you're going to want to see this thing punch through the 108 handle and close above it to maintain that upside bias. That being said, you're still at risk for another wave low, another leg lower or a wave down if we fail at the highs here. And again, the high day close actually comes in at 108.36, so keep that in mind. All right, so guys, that's 9:30. It's going to take us into the close for today. Thanks for all who attended. We'll be back on tomorrow, 8:30 again. So check out and give me more update. Again, it's early in the month. It's early in the week. A little bit more of a cautious approach here. If you're thinking the intraday page has been a little bit light on the setups, we're probably going to stay that way until we get deeper into the week. And again, NFPs on Friday is going to be the major highlight. Kyle saying almost looks like the market is pricing in a bad NFP expectation. Yeah, Kyle, I wouldn't necessarily say it's pricing it in yet. Remember, as far as the NFP is concerned, we're actually expecting a pretty decent print. And we also want to keep in mind one thing. The Fed's major objective and major concern, the major thing that's holding them up today, right now on normalization, is inflation. That's the key here. So the only reason I say that is because, broadly speaking, the employment has largely been coming into the Fed's major target. Again, there's major problems with the broader participation rate, but as far as the headline figure is concerned, they're pretty much almost at capacity there. So unless you get a major deviation and major weaker print, you're looking for 200 plus. As long as you stay above that region, I think, Kyle, it really won't necessarily be something that's a fresh batch of strength, but wouldn't put any holes in expectations for the Fed or when the Fed will start to normalize. Good question, though. Okay, guys, I will see you tomorrow. Eileen says, thanks for the nice lesson and patience today. More than welcome. Jay, have a great day. Guys, I'll see you all tomorrow morning at 8:30. Best of luck trading. Cheers.